All right, I believe we are live. Let's just confirm that here, make sure everything looks good. Looks like it from this standpoint. Let me actually organize everything properly this time. I tend to just jump right in. Then I forget stuff like tweeting out the link so people can actually watch it. That usually helps. Just remember, I'll always like to start off stream saying something like this, and it's so true. Like, I am literally just like anybody watching this. Like, I am in no shape or form a genius, anything special. I'm just here to document and show you live what I'm learning about GameStop and just the markets as a whole. So thank you so much for watching. Whether you're watching live right now or you're watching this back, I do appreciate you. And again, I'm literally nothing special. So you should always double check everything I'm looking at. You know, if, hey, Tetron, did you know this? Or, oh, were you thinking about this here? Or, oh, were you aware of this? And if you feel the need to roast me and be like, oh, idiot, idiot, that's fine. You can do that too. But I'm really, the whole goal is just so lots of individuals, specifically GameStop investors, but of course anybody, can continue to learn about investing and just the tiny nooks and crannies of reading a 10K, all that kinds of stuff. Like I've been saying recently, my new mission is to like learn how to read a 10K head to toe. I want to be able to name any line. I want to be able to, without even looking at the form and somebody else looking at it, like, oh, can you tell me what right of use asset is, or like what is like this part of the cash flow statement. Of course, I'm like blanking out all of them. Like, oh, well, what's receivable? What's payable? I mean, obviously those are like simple aspects, but I'll get into it. You'll see. But the point is, I want to be able to be a master. I feel like aware of what I'm invested in, and I definitely feel aware of how to read a balance sheet, how to read a cash flow statement, how to go through the 10K and see what's going on with the company. But I want to be a master to know how to explain it head to toe, inside and out. And thanks for being part of this journey. All right. Oh wait, Tetron live. There we go. Boom. Rocking and rolling. Get the chat. My man, long time no see. Ryan, what up, man? Thank you for being here. Much appreciated. I've honestly missed streaming. I feel like I came back Monday and it was like so off. I did that one stream with Nathan last week. Besides, I hadn't streamed in like nearly a month. When I looked at it, I was like, holy shit, it's kind of like been three and a half weeks. And I feel like I totally fell off. So I was like, I have to come back Wednesday night strong. And hopefully I'm here to do that right now. So thank you for being here. But I don't have the iPad on the side today, so I'm gonna be rocking the chat on the phone, but it's all chilling. I got a nice little setup here. I just gotta remember to change the chat filter to all messages. Okay, boom, looking good. It's not General Gals, but it's still good. Okay. Yeah, I don't know why the thumbnail isn't working. That kind of sucks. But whatever. We're rocking and rolling here, so we're chilling. Specifically, what I've been looking at the most lately is the cash flow statement because I wanted to get better understanding of how a company can actually make use of its cash equivalents, and marketable securities. Because something I've been kind of talking about lately, and it's something GameStop's definitely doing, and a lot of businesses are doing it, and it really matters in a high interest rate environment. So I wanted to get more into it, be able to fully understand it, fully explain it to you guys. So I'll start off with the definitions, and I'm also actually trying to make this a video. I was working on this last night, but I was getting like creator's block, or I don't know what you want to call it. Like I had all this stuff open, I was doing multiple takes, and like I just couldn't. Like I know what I want to say, but like I just couldn't express it in a good way. So I'm gonna try again, but I figured like fuck it for right now. Let's just do it on the live stream and just go from there. Maybe I'll even clip this up. I don't know. Lots of different things in the works for Tetron. Brick by brick, I'll keep moving forwards, but let's get into it. So cash on a company's balance sheet is their physical currency held in a bank account. So I would call it pure cash, just in an account, using it for day-to-day operations. Whereas a cash equivalent is anything that's typically 3 months or less that it'll mature. So a 4-week T-bill, an 8-week T-bill, a money market account, those are all examples of cash equivalents. Another example of a cash could be like a high yield savings account, things of that nature. So that's cash equivalents, marketable securities. And I want to specifically point out here that on GameStop's balance sheet, right, where you see that and where you know this is the case, it is under total current assets, right? The current assets, marketable securities, second line, and it's a part of the total current assets. So current means in under 1 year's time and could theoretically be liquidated. So if cash equivalents are up to 3 months' time and current is a maximum of 1 year's time, those marketable securities have to be T-bills or something, a CD, something similar that's expiring anywhere from more than 3 months out, but less than 12 months out. So I would say probably about 6 months on average, right? Maybe some 6-month T-bills. And the reason I think that is because when I look over here at the current yield curve, we have an inverted yield curve. So what does that mean, you ask? Essentially, that just means if you buy a farther out treasury bill, you're actually going to earn less yield than buying a shorter term bill. So historically, an inverted yield curve has always been kind of a sign of a recession. It's not always exactly the case. There's some more details on that. Maybe we'll dive into it more later. But my point is, if you're a company that's cash strapped right now, and this is what I'm really piecing together, I'm like, I have to talk about this more. This makes so much sense. You don't want to take out debt right now. If you're a company and you're looking to, let me back up a second. If you're a company, you're looking to expand, right? Grow your business. Unless whatever aspect you're expanding into, whatever segment of business you're expanding into, is going to earn you more than 5% greater returns per year right now, why would you not just put the money theoretically in a money market account, high yield savings, short term T bills? Because right now, on a 6 months T bill, you get about 5.3%. That's quite a lot. So if you're not earning more than 5.3% in a year by putting that cash elsewhere, it economically makes the most sense to utilize your cash through interest rates because it's a risk-free rate. For a long time, and this is something I've kind of been realizing lately, there's been no risk-free rate because the rate has pretty much always been zero or like 1%, essentially nothing. The entire time I've grown up learning investing, this is the first time there's ever been real interest rates. In, what was it, 2018-ish, we had a little bit of interest rates. And I thought to myself, this is so weird. You can actually earn 1.5% on a savings account now. And to me, that was nuts. I mean, to a lot of people, like, wait a minute, this is how I explain to me, like, that are older than me, like, that's how it was. They used to actually be able to get yield on your savings. I'm like, what? That's crazy. That was mind boggling to me. Because keep in mind, in 2008, I was literally 8 years old. So we really haven't had interest rates at this level since 2007. So this is completely new to me, and I had to really learn it over time. But it's just remarkable how it all works, like wrapping my head around it. But where I'm going with this is marketable securities can earn a company a lot right now. So earning 5% of your cash is massive. And in an environment where we have an inverted yield curve and a high interest rate environment, the inverted yield curve benefits shorter term securities such as a money market account or a treasury bill dated 6 months out. And on top of it, if you're going to go to grow and you don't have cash, you need to take on debt. Not in GameStop's case, but then you have to go take on high interest debt. So right now, having cash and a strong balance sheet is extremely important for companies. That's what I'm coming to realize. And GameStop evidently got ahead of the curve in doing that by restructuring their balance sheet. So if you look here, I also have the notes here. I'm gonna pull them up. And literally the usual lamp I have right here, literally the bulb went out, right? I was about to start streaming. I'm like, damn, all right. So it's a little dark by me, but I do have good lighting. I used a ring light for right now, but whatever. Well, I gotta pull it up on here anyway, so I don't even know why the point of having the note. Get that out of here. Okay. So cash flow statements, which I'm gonna show you some other stuff on later. Oh, that's operations. Okay. So I'm looking at 2021 here, this middle line. This is when they raised capital to really turn things around. And that was through share offerings. They made $1.6 billion off of share offerings. They took 307 million of that, paid off outstanding senior notes. They had already started that the year prior, but they pretty much paid off the rest from there. And they had just taken that small French government loan related to the pandemic and assistance there. And it's a very, very low interest rate loan. The rate is literally under 2%. I think it's even under 1.5%. And there's like three different tiny ones, like 10, 12, 14 million, something like that. So that's the only debt they have now, but they paid off any potentially high interest rate debt. I'd have to go back and look at it exactly. But the point is, they utilize that cash to completely wipe out the debt and make the balance sheet much stronger. Because at the end of 2021, they only had 635 million. By raising all that cash, then they had 1.3 billion by the end of this year. Shit, call coming in. Got to return that later. And then you can see here where they purchased marketable securities, which I'm getting a little bit ahead of myself here, but I wanted to backtrack. Keep going with my main point. I'm gonna quickly check chat. Badass Trader, what up? Thank you for being here. Monster, thank you for being here. Everyone's in the house. G America, what up? What up? Sup, all the book kings? That's right, Ryan. He mentioned the French loan. You know what's up, man? AHNST. Ahunst. I guess that's how you say that. I don't know, but thank you for being here. I appreciate you. Let's backtrack here. Okay, so like I was saying, an inverted yield curve. Shorter term, it makes more sense to get the most yield to just keep buying 6-month T-bills, unless of course you don't think interest rates are going to stay this high, then it may change the story. But whatever. Point is, a company in GameStop's position can now exercise their cash. I don't know if that's the best way to put it, but they can utilize their cash to actually earn interest. So I was like, okay, wait, if the company's making money in their cash, they don't have debt, but how, like, where do they actually make the money? That's what I started to like have the disconnect of. I was like, I don't understand. So they're earning interest, but it doesn't really look like it. So I found down here, I was like, okay, well, cash received for interest income. And I realized interest income would be a high yield savings or money market account. But notice how I didn't say T-bills, because I realized treasury bills, let's refresh here, the only interest payment that to you occurs when your bill matures. At that time, you are paid the par amount, also called the face value of the bill. Bills are typically sold at a discount from the par amount, and the difference between the purchase price and the par amount is your interest. So that means the interest earned from a marketable security wouldn't show up here. It's actually showing up. That's from what you're seeing here, this 8.2 million was from cash equivalents, such like a money market account or high yield savings. That's where that interest is from. What you're seeing in terms of how the company can make, like where you see the company making money on marketable securities, such as a 6-month treasury bill, to kind of stick with the example I've been using, that's right here, proceeds from maturities of marketable securities. So they made $27.5 billion in 2022 just off of marketable securities. But look how many more marketable securities they purchased. And from what I understand, and again, like I said, I'm trying to learn as I go here, so please correct me if I'm wrong on this. The purchase price of the marketable securities right here doesn't include the interest earned. So as these marketable securities, let's say they're treasury bills, they could be CDs, right, and things of that nature, but as they're maturing, then it's going to show up here in the proceeds. So this number, what they have is actually going to be more in the future because we're in a high yield environment. So I was glad, like recently, I was like, oh my God, that makes sense. Like that's where we'll actually see it. And as they continue to purchase marketable securities, it'll continue to show. Where am I going? Oh my goodness. Way too far. I don't know why I thought it was at the beginning. So this is like the marketable securities they currently have on hand. And then as they mature, it goes back in the form of cash, unless, of course, then they turn around and buy the next 6 month out treasury bill. So it really depends what's going on, but that's just a little bit of insight of how they're actually utilizing the cash and how you can actually see it within the numbers. So I understood the companies using their cash and marketable securities to earn a little bit of extra money and just boost the company as a whole. But now I was like, okay, this is where you actually see it in the cash flow statement. So what I've been trying to do lately, I don't have it really pulled up, so I don't really want to go through my Google Drive. But basically, I'm trying to define everything and create like a guide, so to speak, of just like defining everything and like kind of just organizing myself as a tool for myself, tool for anybody that wants to use it, like official Tetron guys, something, things of that nature. But yeah, just learning as I go and really just wrapping my head around those specific things so I can look in the next upcoming earnings quarterly report on Q1 and be like, okay, well, what's going on here with the marketable securities? Because now I understand where I'm looking at and where we're seeing things. And there's more things I'm going to continue to dig into on the stream and just going forwards. Like, where was it here? Got some notes on the side. So from the digital assets, no, not there. Okay, yes. No. Yes, okay. Proceeds from sale of digital assets. So is that from the sale? Because I see it's under investing activities and theoretically selling an NFT under operational. Selling an NFT, right? Like if they're selling those or they're getting a cut, I would think that's operational, but digital assets are such a gray area right now. And I was also thinking, well, wait a minute. If GameStop's earning it in a like earning what their cut is through the NFT marketplace in the form of Ethereum, but there's no Ethereum on their balance sheet, they're probably turning around and selling all the Ethereum at the end of the day because they said in the past, we're not interested in having cryptocurrency itself on our balance sheet due to the volatility. We're more about enabling the technology and the industry as a whole. So, having said that, I'm looking at this and I'm like, well, is this them as soon as they obtain or earn Ethereum as a cut on each transaction, are they then just turning around and selling it? And that's why it's technically a proceed from a sale of digital asset, even though it's really just income they're making. So that's something I have to look into a little more. But if anybody does have any insight on that, please share in the chat. I'd definitely be really interested. Because like I said, it's all about like figuring things out here and just learning these tiny specific little things. But yo, G America, what up? Thank you for being here. Appreciate you. Battles to Legends. Oh yeah, Sub the Book King. Oh yeah, my bad, G America. I don't think I said hi to you before. My bad. So Brian, book club exclusive here. You know the vibes. XBit, what up? Thank you for being here. Damn, I get myself 100 emoji right now. I got the chat on the side here. Squeeze on Friday. Stream BNJI. Hey, you never know, right? But honestly, I'm in this for the long term. I'm not really interested in any like 1 day moves or anything like that. I personally plan to sell for a long time. We'll continue to see what happens, but it's interesting price action right now. It's definitely spicy. It hasn't really been this positive in a while. The S&P has been generally pretty positive in month of May so far, so that might be factoring in some shape or form. And a couple of earnings that have come out so far, Target and Home Depot, they're like weird because they don't seem horrible, and I haven't looked super in depthly at them, but there seems to be a lot of negative sentiment on the earnings calls and just sentiment coming out of the report for each of those respective companies. And obviously, that's not exactly what GameStop's in, but it just kind of gives you an idea of where retail's at as a whole right now. And I was also thinking, well, all these companies are talking about all the theft and all this craziness going on, a lot of organized retail crime, and something called shrink. So, shrink is basically just anything that's not accounted for, like basically, companies do like an inventory every year. So if you do your inventory and you're short on like 10% of your product, like your shrink is essentially 10%. So they're all reporting higher shrink as a result of mostly organized retail crime. However, GameStop's business model, like you don't really see. I mean, I'm sure it's happening in anywhere there's a lot of crime right now on occasion. And of course, that sucks. But I don't think GameStop is specifically targeted by these retail theft groups as much. So I do think that's a good thing at least. I mean, I don't know if that's like a positive thing to say, like, yeah, all the other stores are getting stolen from, but GameStops don't really get stolen from, right? But I'm kind of looking to see if they bring that up in any which way, whether it's on the earnings report, briefly mentioning it in the call, just because it's kind of been the sentiment as a whole in terms of retail names. So I've been kind of curious about that. I'm going live in a bit. If you want to join, if you can, we're gonna go live on Discord. I'll watch your show for a bit first. Let me get you some views. Rants? I'm down, man. Let's do it. Let's do it, man. Definitely let me know when you're going live. Let's do it. I got nothing going on tonight. I mean, I got to take care of some stuff later, but I got time. Let's do it. I'm glad this worked out. But good answer. Yep, I'd like to think so. But yeah, no, I'm definitely Marantz. Just let me know what you're trying to talk about, man. I'm definitely trying to catch up. We haven't done anything in a while. But where did I want to go next? And appreciate you being here, Marantz. Really do. Okay. So yeah, also I've been using Bard and ChatGPT a lot for research. I've talked about this a little bit, like here and there. So it's not. I think a lot of people think, oh, like it's just gonna replace everything, or like, oh yeah, it gives you an answer, but it's not that clear. I use it for like understanding things. I'm like, explain this line, and I read what it tells me. And then if I don't understand something, I'm like, well, explain this part or make this part simpler. So like I said, simplify this, please, and then it broke it down a little bit more. So that's kind of what I was doing like towards the end of the day today at work, just like messing around, trying to learn stuff throughout the day. But that's really where I found Bard and ChatGPT to become extremely useful for me. Not to like do work for me, but to help me understand things. Whereas when I'm looking up definitions of this, I have to click from website to website to website. And I'm never just going to blindly trust this and be like, oh, the robot told me that's all it is. But this summarizes a lot of information and can give you quick understanding when you need to understand something as you're going. So like if I'm trying to read through the whole cash flow statement, I don't want to get caught up too much on just one thing. I want to get an idea of what it is and then keep moving forwards to figure out everything as a whole or whatever I'm trying to research type of thing. GameStop talk. You know the vibes, Marantz. You know the vibes. Marantz and Tetron breaking down balance sheets for the win. Hold up. You know the vibes. I've learned a ton from you, Marantz. For real. I've learned so much from you just watching your streams and like trying to understand some of the different things. And I'm sure tons of other people have. So on behalf of myself and a lot of other people, thank you. But also, something I wanted to point out here that I thought was kind of interesting, stock market returns in the 1980s, because I was looking at when I had typed in Bard, but it had disappeared because it was yesterday, and Bard doesn't save, only ChatGPT. But I was like, how much is the yield curve inverted? Because the yield curve inversion relates to the 2-year treasury and the 10-year generally. Let's see, inverted by 15 basis points. Okay, well, when I looked yesterday, it said a little bit more. Let's see what this chart shows us here. But it's constantly updating to you. You have to recall that as well. 4.12, 3.57. So there's a decent spread there. But what I started thinking, because then I was like, oh, well, what is the largest yield curve inversion spread of all time? And the reason I'm typing this in, I want to show you guys like why I looked up what I did about the 80s and where I'm going with it. Okay, board. I guess it's going slow today. But essentially, it was, okay. Occurred in 1981. The yield in the 10-year Treasury note was 14.82%. The yield in the 2-year note was 10.18%. A spread of 4.64 percentage points. The yield curve inverted several times since then, but the spread has never been larger as it was in 1981. In fact, the yield curve has only inverted 6 times since 1955 and only once since 2000. Well, I don't think that part's accurate. See, this is also, you have to read and understand, like, it's not 100% accurate, but it gives you, like, summaries of data. But what I want to show you here is if you go back to December 1981, and where I'm going with this is that, bro, why? What? Okay. Where I'm going with this is is one of the largest yield curve inversions ever, just as like another point, kind of. I don't know why this is working, because at that time, yeah, look how high interest rates were. So yeah, something's inaccurate there about Bard, but basically the spread was so massive because the interest rates as a whole in the 80s were just so high, and that was to bring down raging inflation. So it's when I see that, I'm like, who's to say interest rates won't keep going up? But however, look at the debt situation. They're not even raising the debt. So there's so many different things going on with it. But where I'm going here is stock market returns, and this is just Blue Rock Wealth Management, just one point they made here. Stock market returns are positive despite double-digit rate hikes, high inflation, and high employment, which kind of seems what we're going into. Value stocks did better than growth stocks. Being diversified helped achieve positive portfolio returns. So value stocks did better than growth stocks. And I think part of the reason is everyone's been chasing growth for so long, going up until these recent past couple of years, because if you look at the market right here, nothing wants to load. Go, go, go. Okay. Right here is when interest rates were risen for the first time. Again, nothing loading. March 16, 2022. So that was kind of the peak. And this is really where we saw the shift begin of the hype in growth stocks just completely deflating, to be honest. Like, it just completely deflated after interest rates started rising, because it's like, hey, wait a minute. It doesn't really make that much sense to invest in, they're going to make money in the future. Oh, future cash flows. Oh, it's about future cash flows. It's going to cost you your debt. It's going to cost you getting debt and paying high interest. And then are you really going to get those cash flows? So I think it really woke people up a lot and kind of started the shift towards value investing. And if you look at a name like Pepsi, like let's look at Pepsi right now. It's just a random one I can think of. Look at them. They've done quite fine since then. I mean, they're a product that's defensive, I would say, because as people are always going to kind of buy Pepsi, Coke, your bag of chips generally, despite what generally inflation is. But look what they're doing. They're still issuing dividends. I thought they had raised it on the last one. Yeah, so they did raise it. Interest rates start going up. All right, no problem. We'll raise our dividend. And companies like Pepsi, who have a strong balance sheet, I would have to look at the specifics of Pepsi, and I'm not invested in Pepsi or anything like that. I know my grandpa is a big time Pepsi shareholder. He has been for like a very, very long time. Put it this way, my grandpa inherited Pepsi from my great grandpa or my great great grandpa. I forgot exactly. So Pepsi's been in the Tetron family name for quite a while. So that's kind of why that's the example I chose. But point being, companies that have strong balance sheets and that are value companies have been there, right? They, if excuse my voice crack, value companies been there, right? So they've been around for a while. They're just chugging along. They can adapt and use their balance sheet to their advantage to buy back stock, boost dividends, make acquisitions. Whereas other companies that it's a growth company, its valuation is getting beat down, and then maybe a company that's a value company can come in, acquire it for something completely undervalued, and it fits whatever their business model is. I mean, Pepsi's not the greatest example for that, but where I'm going here is value stocks did better than growth stocks. So I think GameStop is really turning into a long-term value play. And it's being perceived by the market as like, oh, it's this growth name. But then last earnings, it got a big pop because it's almost like the market's, when I say the market, it's just general sentiment, I would say. Or you can think what you want. I'll give you like leave it open-minded to you of what like the market thinks, but the market thinks, in my eyes, like, okay, well, wait a minute, they're profitable. This is why I started going up. And now going into this next quarter, it's like, well, the next quarter looks like it might be profitable too. And it's also it's like, wait, if the company's consistently cash flow positive, EPS positive, net income positive, then all of a sudden the market's not really valuing it fairly. I mean, I don't think it is generally at all for various multitude of reasons, but that like the numbers don't lie, and the numbers actually coming out and showing what GameStop's been talking about, I really think is a fact in that, because it's the whole mentality I've been saying of like, don't believe me, just watch. And now the market is watching and observing. And this is all while there's tons of individuals that just love the company and will support it any way they can and just buy shares consistently. You just don't see this kind of ownership by individuals in any other name. I think the next closest thing is Tesla, just because so many people love Tesla and they've held the stock for maybe a long time and they believe in Elon or whatever the reason is. I see the passion there, but I just don't see it with any other stock out there the way it is with GameStop. So it's like all just starting really for GameStop. It's all like everyone's still early, if that makes sense. That's kind of my perception there. But damn dude, that sounds like AMC too. I don't know about AMC turning things around. That's the thing. AMC with a tough is in a tough spot because they already had tons of debt. They didn't really do anything to turn things around when all the hype was happening with their stock. The executives just sold. And if you look at GameStop's insider activity versus AMC's, like that really tells you the whole story there, in my opinion. Like that alone tells you so much. I mean, obviously, it could go deeper than that, but just on the surface, that kind of tells you where each of them are at. And also, I forgot to show before, the treasury yields. So yeah, see the short yields right now, very, very high. A Fidelity money market account, you can earn like 4.5% interest right now, which is quite incredible. And buying a T-bill, you get about 5.5%. I'm sorry, 5.2, 5.15%, which maybe it's just somebody watching like, oh, that's like still not the highest, but to me, it's just mind-boggling. You can earn that much on your cash. And it's only mind-boggling to me because I learned finance and understood anything I've ever learned about it in a time where interest rates have always been like 0 to 1%. And to me, it was always so weird learning in school. I was like, I don't even understand. And to give you perception of like somebody my age. It was like, why am I learning about bonds and interest rates when the interest rates are always zero? This is so like I should be learning about like stocks and stock picking and things like that's what I was thinking in college. But now I'm like, oh, this is why there's actually like risk versus reward. So if you're going to only earn, if you're only expected to earn 3% from a new business venture, it doesn't really make sense when your risk-free rate is almost 5%. So just starting to understand things like that over time, it's really all started to come together for me. I mean, maybe I'm ranting here a little bit, but just kind of some of my thoughts and perceptions there. Opinion on Q1 2023 for GameStop. Mahari, thank you for being here. What up? It's been a minute. I think it's going to be good again. They continue to cut costs. They continue to put money in marketable securities. So I think we'll see some of the marketable securities mature. We'll see cost cutting. One or two things I can think of off the top of my head will be the Kentucky Distribution Center fully being shut down. Florida Customer Care Center just fully wound down. Some operations in Europe continue to be wound down. And I'm kind of curious, obviously, one, DRS, but two, what's going on with some of those 2023 leases? Because I've definitely showed this before. A lot of decisions need to be made. I think it's at the very beginning. Let's see if I can find this here pretty quick. But the quicker I can find things on here, the better I know, or the more I know I'm reading this balance sheet and cash flow statement and just report as a whole. Let's see, the leases. Right here. So a lot of decisions on leases coming up for this year. So I want to hear a little bit of commentary on that. Maybe something about not like Milan, Italy specifically, but more of the in-store experiences, more events in the store beyond the experience, such as everything they did with Zelda. Zelda was a huge hit from what I understand and seeing the pictures. So more and more stuff like that just brings in more foot traffic. So if you have experiences bringing in foot traffic, you have events bringing in foot traffic, and then you expand the store to have some higher margin items such as collectibles, board games, and then also there's kids stuff there, like for like little kids, maybe some toys and things like that that they can kind of move into a little bit more. That's oh mommy, we have daddy, we gotta go to GameStop. GameStop. Oh, they're gonna have this. I saw it on Instagram, like stuff like that. I don't know. Exactly, that's the best way to put it, but as a whole, I really want to see what they're planning to do with all of their leases, just expanding their operations from the stores they have. I wouldn't be totally surprised if they close down a couple more stores here and there. I don't think they're going to go shut down a massive amount of stores, but if they have the opportunity to extend a lease and then maybe expand on a store, and there's another store in that same region or close by. I mean, this all has to be decided by the company and they see the specifics of this. But I could see them being like, okay, well, we have two stores like here and here, but there's a very large building right here. Let's wind down those two stores and then like make the announcement that the new location is going to be here. Like if this is just one tiny town, not tiny town, but maybe, I mean, it all depends where. For me, everything's very close by because New Jersey and New York metropolitan area, everything's very close. So you could probably go to a GameStop like every 20 minutes if you just kept driving. So if it was like that around here, it was like 10 minutes away, 10 minutes away. It's like, okay, well, or sorry, 20 minutes apart. Put one, trying to get one in between with a larger building, and you just keep bringing in more people. But I don't know, it's a little bit of a rant there and ramble. But really, what they're doing with the leases, well, of course, what does the bottom line look like? What are some other events maybe? But the thing is, I don't think they're going to get too into events or anything specific because, like I was saying before, GameStop's mentality has always been, don't believe me, just watch. So as we see more of what they do, it'll probably be through watching, not necessarily listening to an earnings call. But I think we'll definitely see some interesting stuff in Q1 just because to me, everything's interesting with GameStop. No matter what's on the earnings report, I'm going to try and dig every line through it and just figure out every little thing. Days Perk, thank you for being here. Glazer's out. All right, sure. I voted all for the board recommendations. Me too, Mahari. Me too. And yes, don't forget to vote, everybody. Very important. Marantz and Tetron stream coming in. Good Wednesday. You know the vibes, Monster. You know the vibes. It is a good Wednesday. Because it's Wednesday already. I'm like, fuck, this week of work. has been busy, a lot of stuff going on. Yeah, life is just. I feel like that Ferris Bueller scene right now. I'm like, damn, if you don't stop and look around once in a while, like you're gonna miss shit. Like I just feel like I just so in my head about like, oh, I have to do more on YouTube, or like, oh, I have to do this in my job, or like just about various different things. And then also I'm like, it's May 2023. What the heck? That's so crazy. It was just winter like 5 days ago. It feels like so. Time be flying, but I'm really trying to just organize everything, organize thyself, keep pushing forward, but also still like keep seeing everything around me. But it's weird. Time feels like it's flying, but it feels like a decade since the last earnings report for GameStop. So yeah, but also the more I work now, and I hope that I'm not trying to sound like I don't know what the word is, but just the more I work for a company and just with other people and just career whatever, the more and more I realize I'm like I want to do my own thing, and I don't know if I don't think it could just be solely YouTube. I have lots of different ideas of what I want to do with Tetron like over the next decade. It's like way out, and I'm still figuring out as I go, and that's why it's all documentation, right? While I'm doing live streams videos. But I'm just realizing like, damn, I do not want to work for anybody else. I want to work for Tetron, So one way or another, I am trying to get there because I just look at it like I put through all this effort in my job, and I used to be a Marshall's manager, and I put all my effort there. Ultimately, it'd be so nice. Like I want to, and I'm like I don't put in. I put in so many hours out of my life. I have to keep putting more and more time into YouTube, more and more time into Tetron, because I put all this time into this job, and it's not even like I own the company. Like I don't know. And the whole thing is, it's like there's no boss. I am the boss. So I have to keep myself motivated. So like that's just kind of some of the stuff I've been thinking about lately. I'm like, I gotta figure this out. I gotta figure this out. I can't work for someone the rest of my life. Like I can't. Like I have to do everything in my power to work for me. But at the same time, if I have a good partner or whatever. I mean, I don't know. I'm not saying it could totally happen, and that's just me personally too, to be very clear. So like, I'm not trying to say like, oh, working a job is trash or something stupid, but I don't know. Just some of the things I've been kind of realizing lately, and also for documentation purposes. So like, one day I can look back and be like, yo, I've been saying this. I've been saying this. I can't give up now. So there's a future time when future Tetron is watching this back, and I'm like, oh, I don't know this. Like, keep going, Tetron, keep going. So talking to my future self right there. But Eric, what up? Thank you for being here. All the kids want GameStop. That's a fact, Monster Buddy. I would think so. I know when I was a kid, I always wanted to go there. It was always a good time. But let's see what other notes I got here. Trying to always just write stuff throughout the day. Oh my God. So I got new glasses, and I wore them on Monday on the stream, and I wore them yesterday to work and just throughout the day, because I've been wearing contacts for like months because my glasses have been broken. So I just kept going with the contacts. I'm like, all right, I gotta finally get new ones. But they're pinching so much on my nose that I don't know if you can see. There's literally like a mark here still, and I haven't even wore the glasses since this morning. My nose legit hurts, like the bridge of my nose, because it's like literally so tight. So I have to go back and bring that back. The only reason I bring that up is because Pearl Vision, got to go back there. That's what I do. I write post-its all day of random things I got to do. So yeah, and then I write scribble notes to go over my live streams. But a couple other things. I actually wrote some of these Monday, but so freaking chaotic at work Monday that I wanted to bring this home. But just a couple other things I was looking at, that if you look at price to sales for GameStop right now, it's about 1. So which basically means their market cap is equivalent to their top line revenue, because it's price divided by sales. So price is market cap, but also if you go price per share divided by revenue per share, it's the same effect essentially. So price to sales is 1 right now, which I think is kind of interesting. A lot of retail companies tend to trade around that, and I'm fine with it. So despite revenue on the top line being flat, bottom line revenue is still improving, or has improved, and we'll continue to see if it continues to improve, which I believe it will. So even though top line revenue isn't necessarily rising, we saw the bottom line have a $200 million swing on the same amount of money made on the top line, which just shows they're cutting costs. And also, the market's still valuing at a price of sales of 1. So it's like, okay, well, that's on the surface, but when you look underneath, the bottom line's completely changing. Yeah, and I talked about before the cost cutting of the Florida Customer Care Center, Kentucky Distribution Center, Europe. Really would like to see a couple more partnerships, maybe some kind of GameStop exclusive with a different game coming out, something along those lines, just more GameStop exclusives, only in store. I was talking about before a little bit, these in-store events. And then, yeah, I was talking about before also, pretty much everything I wrote down, I kind of already talked about, like with the shrink, theft, cutting losses. So we'll see if they bring that up on the call. But like again, I don't think GameStop's as much being affected by that. Potentially, we'll hear it. We'll hear about it, but I don't think so that much. Maybe though. All right, let's see what to go over next. And really, I encourage like anybody like when you're reading this, you're like, oh, I don't quite like understand this right here. Just put it in ChatGPT and be like, explain this in simple terms, or like research it however you research it. But part of the reason I made this channel too, and just like talking about all this stuff is a lot of people are like, oh yeah, the dumb apes, like, oh yeah, like GameStop investors, they don't know, they just like blindly following and whatever. But it's and this mentality of like people in general, like outside of GameStop and just outside of people who invest, like, oh, I can't invest, I don't know how to do that. Like it's all out there. Like it's public information. You just have to want to understand it. And of course it's not easy. Of course it's not easy. That's what I realized too. Like I'm like, oh, I've been reading this stuff for so long. I went to school for finance. Maybe I'm just an idiot. Sometimes I think that I'm like, oh, I should know how to already read a 10K inside and out, every little detail, every little line. And so I start thinking. Then I go, no, it's supposed to be hard. It's supposed to be fucking difficult. It's not supposed to be easy. That's what I realized. So I'm like, all right, I'm not quitting. Not that I was ever trying to quit, to be fully disclosed that. I was not trying to quit. But my point is, I think a lot of people, because if I'm thinking that, I'm like, there's got to be a lot of other people thinking about that out there too, in the sense, oh, I'm not smart enough, or like, oh yeah, like just the finance guys know how to do that. Oh, I had so many numbers, I could never. You can. I think everybody thinks like, oh, I can't, or I don't know, or I just, it's not my thing. That's a lot of people say, oh, I don't know anything about investing. Okay, well, do you want to? If you want to, go out there and learn it, like you can. And like I'm trying to also be an example of that. And again, while I am documenting, if you watch my old videos compared to like watching anything I talk about now, it's completely different how I talk then than I do now. And in a year from now, I expect it to again be completely different. I think I'll have a completely different background, and just some other stuff going on. But it's all about like adapting and learning as you go. So it's your little motivation to like not give up on yourself, as anybody watching this, in case you needed it. But yeah, and I would love to see the earnings report as soon as possible because I just want new material and information to just dissect and just understand. And remember, what I'm looking at here is full year, right? 2022 over 2021. It's going to be really interesting. Do we disconnect? No, I think I'm good. Over Q1 2022, because really how I've been looking at it is 2021, Ryan Cohen starts putting in the new board members, issues shares to pay off all the debt, make a strong balance sheet, really turn everything around. 2022, so 2021 was like cleaning out the crap, right? Take out the garbage, take out the trash, plant the seeds. Then 2022, so that was 2021. Then 2022 is about watering the plants, right? And giving them sunlight and giving them fertilizer, things to help start the growth, right? Create the foundation for growth. Now I see it as like we're in 2023, the garden is there, but let's protect it from deer and insects and whatever, and let it continue to grow because the soil's there, the plant's already planted, everything's now there underlying. Now it's about starting to execute and like move upwards and forwards. And it's not just going to be like, I think, boom, 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 super steady, 20% year over year growth, boom, boom, boom. Nothing like that. I think it's going to be over time, and also part of what's going on in gaming. There's so many different factors, but I just know as a whole, that's where the company's trying to go and growing those seeds. And what I've really come to learn over time is two things. One, about trusting in the people running the company because it's so important. They're making so many little decisions. And if you don't trust in those people or have belief in those individuals, then they can take the company any which way. And it's hard to really know where their interests align, right? And some of these other names, let me just put it that way. But beyond that, like something I've been thinking about lately is too, I'm like, it's going to be hard to, it's mostly, I'm talking like, sometimes my mouth moves faster than my brain, I swear. It's going to be hard to ever invest in another company because I have learned so much about GameStop. I've taken so much time to understand the company inside and out. So I can, so, oh, why this, why that with GameStop? I can have a great conversation with anybody and give them a very detailed explanation of why I like the company, what's really going on, what the true story is versus what the narrative they're reading is, talking about somebody outside the GameStop, like saga or whatever you want to call it. So I realized, I'm like, wait a minute, it's going to be hard to pick other individual names because if I go start investing into a name, like I had Pepsi up before, I'm like, oh, I'm going to go start investing in Pepsi. Unless I know every Pepsi executive, I've looked through all the earnings, I understand every line of the, like all the details, it's going to be hard to feel good about putting money into something else unless I do as much research as I have on GameStop on a company in the future. So that's taught me to not just chase the next big play, right? Because you're here, oh, it's the next play, it's the next play. Well, if you think it's the next play, you better fucking go look at it as in depthly as you've been looking at GameStop. And that's mostly for me to myself, but I really feel like that's with everybody in general, like that's really how you should go about it because understanding what you're investing is so important. Otherwise, I'm like, well, wait a minute, I might as well just do, and if I'm not going to put in that due diligence time, I might as well do index funds and just general S&P 500, and in that time instead use it to do something else that's productive for whether it's my career, building a business, whatever, because I'm not going to spend time half-assing, half reading, invest in 8 different names but only know like, oh yeah, they're all growth companies, oh yeah, they're all good value, but like I don't know the specifics. I couldn't answer questions about those companies like I would be able to about GameStop. So I guess what I'm saying here is it's really, really important, and GameStop's taught me the value of understanding a company inside and out before investing in it. And that's something I've never done before. Because again, guys, I'm just about to turn 23. And this is all documenting, all about learning as I go. And prior to GameStop, I was always chasing the next big play. But then when I started to see things like AMC and the way GameStop played out, and actually just becoming more and more aware of the numbers and what's going on with the company, I'm like, okay, like my just perception on the stock market and everything as a whole has just changed so much. But bit of a tangent there. Yo, Tetron, name an ape, special species and actions, make a quick art piece. NTRP, my bad. What up? Just saw your message. Thank you for being here. Galapagos turtle eating, not an ape. I'm a turtle, not an ape. All are welcome, brother turtle. Cowabunga. All right. An ape species in action. Um, I don't know. I would say just like an ape and like on the come up in some way. I don't know. Like, can you make it like learning or something, like reading the numbers? Like, if you have some kind of art like that, it sounds cool. Just like looking at things. But yeah, I don't know. I just feel like I haven't had that much material to go over. I don't know. I gotta find some other things to get into, and I really want to go back into making more videos, but part of me thinks I should do editing of videos, be more in depth, but that's just a lot more time and a lot more understanding of editing. We should keep going with the one take sessions. Yeah, no, I don't know. Sometimes I'm just talking out loud. I'm gonna figure this all out, guys. Don't worry, don't worry. But there's still so much to learn. There's so much to learn. I think I understand now, and in a year from now, I'm gonna look back and be like, "You're a fucking idiot. You didn't know anything." I mean, not actually, but at the same time, it's about just constantly learning. Like I really, really realized that, and just wanting to be better is just such a huge, huge part of it. And like I said at the beginning of the stream when I started it, I'm just like everybody else in the sense I have bad days. I have days where I'm like, oh, I can't be better. Like, oh, this is it. But I'm like, no. And I wake up the next day and I'm like, no, that's just not it. That's not it. Got to keep going. You got it. NTRP, thank you for being here. And yes, sir, I do think I got it. I appreciate you. But this is a great next point to go into here. Pulte on Twitter has he officially directly, whoa, what did I just do? Directly registered shares. Uh, I'm honestly surprised. I actually didn't think he would. I saw he tweeted, he was like, at dearest GME org. Why did it just disappear? DM me, and I was like, oh, okay. And sure enough, he posted today a direct share plan buy, which it's not book, but I saw like every reply on there was, was book it, book it. Then step two, number 2, terminate plan to change book holding. Instruction guide here. Thanks. Pretty incredible. Pretty incredible. Let's see. Meme funds, UBS, Citadel, Coleman, Elliott, and Cyphers that won't pay out credit sus default swaps. Would have lost tons of money on the credit sus default swaps. We're just gonna not pay. Fuck you. Not funny. Credit default swap panel rules. Credit Suisse AT1 wipeout won't trigger payout to swap holders. Wait a minute, I have to look at this more. I did hear that today, but I didn't really look into it too much. That's very interesting. And I have to go find. I know I have notes on the deal when it happened with UBS and Credit Suisse, but it's just so mind-boggling. Like, I don't even think UBS wants it. They're just kind of being forced. Like, you're the chosen one. You have to take over everything that was going on here. And they probably open up and look, oh, what the fuck? Like, when they started getting the books, because they didn't really like. It was agreed upon, but it was emergency action by the Swiss National Bank over a weekend. Like, that's not a good sign. So pretty crazy. But Metagates releases live on MC and it on the GameStop marketplace, and not a peep on here, nor a direct post from GameStop NFT or GameStop the Bird app. Where's hype? This is a big deal. Should be more hype than PG and Loop. Voyage AR. Let's see. And this is why I like Bard too. Just be like, all right, so what's Voyage AR? And then also I'll look it up for myself. Voyage AR. That's too general. It probably won't even have it. A lightship experience is a hands-on look at the immersive AR experiences you can create using the Niantic Lightship AR development kit. Oh. Okay. AR Voyage is an augmented reality experience that allows users to explore different locations around the world. The app was created by Nexus Studios and is powered by Niantic's Lightship AR developer kit, ARDK. With AR Voyage, users can find and interact with AR content at specific locations around the world. For example, users can plant virtual flowers in San Francisco, or they can see Captain Dottie, a fictional character, appear in multiple locations in the city. AR Voyage is still in development, but has potential to be a powerful tool for education, tourism, and entertainment. The app could be used to teach students about different cultures or show tourists around a city. It could also be used to create interactive games and experiences. Check that out. All right. Here are some of the features of AR Voyage. Location-based AR. Use GPS track location and place AR content in the real world. It allows you to interact with AR content at specific locations such as museums or even your yard. Multiplayer AR Voyage supports multiplayer AR, which allows you to share AR experience with other people. It's a great way to explore the world and friends and community. Definitely necessary for games. Custom AR content. AR Voyage allows you to create your own AR content. This is a great way to share your creativity with the world. Very interesting. I kind of want to download the app. Let's see. But yeah, where's more information on that? I'm surprised. Call over to Marantz if you get a chance. Okay, Scott, what up? Thank you for being here. I'm going to do that in a minute. Hold on, just check this out real quick. Yeah, I got to get Discord open. Okay. All right. Actually, I'm going to look at that later. Is Marantz going? Let's see. Should I get a notification? Oh, okay. Yeah, he is live. He is live. Call over to Marantz. Okay. I'm going to pause this stream for right now. Or, no. We'll just call him first and we'll go from there. My bad, guys. I can really be a newbie with some of this stuff sometimes.